Welcome to the Hamsey Analytics Daily Market Commentary. I'm Pablo Navarro. Today is Monday, August 6, 2012. For the market internals, the New York Stock Exchange Advanced Decline Differential closed at 731. Nasdaq Advanced Decline Differential closed at 593. There were 29 new 52-week highs for the S&P 500 and only one new 52-week low for the S&P 500. For the volatility, we had a very big volume day today with 790,000 contracts traded on the VIX and 136 million in total premiums paid. For the dollar weighted put call ratio, in August we saw a 9.12 with 26% of the total premiums paid. September a 0.27 reading with 13% of the total premiums paid. October at 2 with 30% of the total premiums paid, and November at 0.01 with 27% of the total premiums paid. As you could see here, we had the front month very bullish, then bearish, bullish, and bearish. This could be some spreads that are coming on here on the September, November, on August and October. So we're gonna keep an eye on these ones to see what goes on the next following days. Okay, here we have the daily chart for SPX. We have a very interesting pattern here. You could see this upward trend line was resistance into the close again. We failed to break and close above it. We did spend most of the day above that trend line, but then it just sold off into the close. We're gonna watch that, and we were not able to close above it. Tomorrow's gonna be another day to watch this trend line. We want to break and close above 1400 tomorrow. That's gonna be where the trend line's gonna start tomorrow, but still pretty positive continuation of what we had on the after this big move on Friday upwards. CI continues to go higher, you can see here, and CI dip also continues to go higher. We're gonna look at the 5-minute chart to see what happened into the close. You could see pretty tight range throughout the day, basically going nowhere. The whole day was pretty tight. Not much of the trading day here today. And then into the close, you could see how it sold off pretty hard. But again, it was overall a good day. 3 handles higher for the day, and we still closed a little lower from the trend line we just talked about. We're gonna look at SPY here to get some targets. Here we have the SPY. Let's start with the hourly charts. We're gonna look here at the resistance. Here we're looking for 140.80. That's gonna be resistance number 1, and then we're looking for 138 on the downside. That's gonna be our pivot on the weekly support and resistance. So 140 on the upside, 140.80, and 138.20 on the downside. This is for the 60-minute chart. We're looking here at the daily chart right now. We again look for 141, almost 140, to break this positive 2 sigma channel. On the downside, we're looking at 136.40. That's going to be the 0 sig, a very important line to hold. And we'll see what happens here. We hope tomorrow we get a more wider range than we did today, because there was almost nothing going on here throughout the day in the market. For GLD, here we have the daily chart. We were up almost 0.5% today, 156.30. Again, we're looking to break that 158 level, break to the upside, maybe that a breakout, go on even try this 160 level. That's going to be critical here on this daily chart for GLD. Very tight range so far, and looks like we're gonna have to try. We want to try another attempt here to the highs. So we're gonna look at what happens there, and then maybe go from there. Targets on the GLD 60-minute chart, we're looking at 155.60 and 157.60. Pretty tight range from here on the middle of the range. So we're gonna see what happens here. If we do break to the downside, we're looking for 153.50, and to the upside 159.72. So those are important levels to keep in mind this week on GLD. Again, very tight range on GLD. Looks like we're coming into a very coiled position on daily chart. We're just gonna look at it in a minute, and we're maybe setting up for a break either to the upside or to the downside. Here again, GLD daily chart, you could see how tight the volatility is here. Pretty small range from here to here. And we're not even at 5% moves here. And last couple of months, pretty tight. Looks like a triangle here so far. And we also have the 100-day moving average, which is the white line here, on the upside being a resistance so far. You can see here the that lower part of this triangle, and here I'm drawing right now the upper part. We need to break 155.70, which is the 100-day moving average, and then break these highs. Maybe go on even test this 200-day moving average. If we do come here, it will be a very interesting point. Maybe try to start move lower from this if we do fail. If not, we will try to come here to the 170 level, but again, we first need to break this triangle that we're right now. We've been here over a month and a half and no break to either side, so we continue to watch here this GLD triangle formation we have here. For the IWN, this is the ETF for the Russell 2000. We've seen here that we've been lagging while the S&P and the Nasdaq continue to go higher, also the Dow. And this index, which shows risk on, risk off, because it's the small caps, has been lagging. Today we had a good day, almost up 1%, but then we sold off into the close, and we are watching this triangle here right now. Target for this IWN is around 171.50, 171.60. We want to break that to the upside and continue to try to find the highs of the year, as we are pretty close on the S&P and Nasdaq on the high, but not on this risk on, risk off index. We want to get some risk on appetite here, bring this forward and bring the IWN higher, maybe break to 72, 73. That would be very positive for the market. If this starts to lag again, it's gonna be a sign here that no one is wanting to take risk on trades. Maybe they want to trade the S&P and the Nasdaq, but not the risk on, which is the small caps. Here we have another index, the transportation index from the Dow Jones. You could see here this one is even below the 200-day moving average, which is the purple line at 5,005 and 85, sorry. And again, showing some. It doesn't want to go higher with the market. This is some cautioning sign. Maybe this is looked at the forward economy transportation index, and it doesn't want to participate in the rally we've been having on the market. S&P, Dow Jones, and the Nasdaq. So these two indexes, the IWN or Russell and the transportation index, are critical. We want them to join the rally here, break these lower highs that we're making on this one and on the Russell we just talked about, and also break this 200-day moving average around here, are gonna be critical for them to participate in this rally. Another triangle, you can see here this upward trend, higher highs and higher lows and lower highs. We could see here we want to see a break above here, maybe come and test the 500, 5,200, 5,300. That's gonna be very important on these two indexes, Trends and IWN. Better keep an eye on those two. Last chart here, we have the VIX daily chart. We're at 1595 right now. We were only 2% higher for the day, although the SPX was higher also, as we mentioned. We are at very low volatility environment right now. We want it to stay this way as the market goes higher. Around below the 1755 would be a very good area to stay underneath for a while, and the VIX could stay here for a long time. So it doesn't have to show that we are getting into a top right now. It just shows that we are in a low volatile environment so far. You know, the VIX, it changes very fast, so just keep an eye on it to see what it's showing right now. We are seeing lower highs here on the VIX since long time ago. We've mentioned that throughout the days here on the video. We have a special offer by TradeStation. Get your Hamsey Analytics proprietary indicators paid by TradeStation. Contact Active Traders Office in Chicago, Peter Albino, at the number listed below. Have a great night, and I'll talk to you tomorrow.